Texas LLCs offer unique advantages, but navigating their filing requirements can be complex. This video will guide you through the essential aspects of Texas LLC taxes, compliance, and beyond. Limited liability companies, or LLCs, are popular business structures due to their flexibility in tax classifications. The Internal Revenue Service allows LLCs to choose from existing tax categories, including sole proprietorship, partnership, or corporation. By default, single-member LLCs are treated as sole proprietorships, while multi-member LLCs are classified as partnerships. This flexibility is a key reason for the popularity of LLCs. For single-member LLCs, the IRS considers them disregarded entities. This means the income passes directly to the owner, who reports it on their personal tax return using Schedule C of Form 1040. The owner pays tax at their individual rate plus 15.3% in self-employment taxes for Medicare and Social Security. Multi-member LLCs must file IRS Form 1065, the partnership tax return, unless they specify a different tax method. This form is primarily informational, detailing each member's share of profits through Schedule K-1. Members then use this information to pay income tax on their share of profits at their individual rates, plus self-employment taxes. LLCs also have the option to be taxed as corporations. The S-corporation status is often preferred as it can reduce self-employment tax obligations. To elect this status, the business must meet certain requirements and file IRS Form 2553. Alternatively, LLCs can choose to be taxed as traditional C corporations by filing Form 8832, though this results in double taxation. Now let's focus on Texas-specific LLC tax requirements. Unlike many states, Texas does not require LLCs to file annual reports. However, most LLCs must pay a franchise tax to the Texas Comptroller of Public Accounts. This tax is based on the LLC's net surplus, which is the net assets minus member contributions. If your LLC has employees, you'll need to pay Texas employer taxes and obtain a federal employer identification number. Texas employers may also have to pay state taxes like unemployment insurance. For LLCs selling goods to Texas consumers, collecting and paying sales tax is mandatory, typically on a quarterly basis. The Texas franchise tax applies to LLCs based on their total revenue, calculated using the margin method. As of 2023, LLCs with annual revenues below $1,230,000 are exempt from paying franchise tax but must still file a no tax due report. Franchise tax reports are typically due by May 15th each year and can be filed electronically via the Texas Comptroller's website. LLCs can choose from 3 calculation methods for the franchise tax: total revenue minus cost of goods sold, total revenue minus compensation, or total revenue multiplied by 70%. Failure to file or pay on time can result in penalties, interest, and potential forfeiture of the LLC's right to conduct business in Texas. Beyond tax obligations, Texas LLCs often need to secure various licenses or permits. These may include local business licenses, professional licenses for specific industries, regulatory permits for activities like food preparation or alcohol sales, and sales tax permits for businesses selling tangible goods. For nonprofit LLCs in Texas, it's important to note that they are not automatically exempt from federal or state taxes. To gain tax-exempt status, nonprofit LLCs must meet specific requirements set by the IRS and the state of Texas. Maintaining this status requires ongoing compliance, including annual filings and adherence to the organization's stated purpose. To optimize tax planning for your Texas LLC, consider strategies such as choosing the most beneficial tax classification, taking advantage of allowable business expense deductions, and making quarterly estimated tax payments to avoid penalties. Operating in Texas provides an advantage due to the absence of personal income tax, but it's crucial to comply with state franchise tax requirements. In conclusion, while Texas LLCs offer flexibility and potential tax benefits, they also come with specific filing requirements and compliance obligations. Understanding these requirements is essential for maintaining good standing with both federal and state authorities. For personalized advice tailored to your LLC's unique situation, consulting with a tax professional or attorney is highly recommended.